Hi everyone, it's Stuart. It's Wednesday. It's the excuse me. It's the 4th of June. We've got the Bank of Canada expected to leave rates as they are. About a 20, only about 25-26% chance of them cutting rates. It was last week. Quite likely, possibly that they were going to go, but some data has come in that's changed their mind, particularly the inflation data and the GDP data. So this is the dollar CAD we got here on the um, the 1 hour chart. We've also got ISM data. We've had some ISM data, services PMI data as well in Europe this morning. So plenty going on this week. ADP was a big surprise earlier as well, a big miss, very soft, 37,000 compared to expectations of 111,000. So that was a huge miss for the private payrolls, but we were expecting there could have been something around that. So here we got, let me just flip this to the 5-minute time frame, dollar CAD under 137 this morning and moving lower. If we roll this in, this is that low from earlier yesterday at 137.08. So we just sorry, if I just take this back up to the hourly time frame, you can see this low we had last week, which took us to 136.75. So that's a downside target. Sorry, not last week. It was earlier this week, wasn't it? Second on Tuesday. Last week we were here at the end of May under that 137 area again, but 136.90. So we're in that zone again. You can see that a wee bit better now. So ticking lower. So let's have a look at the calendar today. Let me just refresh it and update the data. So today's calendar for Wednesday. Let's quickly run through what's gone on already today. GDP in Australia was weaker than expected. Came in at 1.3% from expectation of a tick up both on an annualized basis and on a quarterly basis. That's particularly weak for the first quarter, 0.2 of 1% from 0.6 of 1% and 0.4 of 1% that was expected. The annualized 1.3 from 1.5. In Europe, the raft of PMI data was more or less better than expected, except the main bellwether economy in Europe, the Germans. Services 47.1 from 49 last time, so still in contraction and slipping further into contraction, and the composite coming at 48.5, back from just a scrape first month we'd been over expansion last month in Germany. UK numbers were better than expected as well at 50.9 and 50.3 respectively. ADP was a big surprise here, 37, much worse than expected, 37,000 from 60,000 last month, and again that was revised lower from 62,000, but we were expecting quite a tick up in private payrolls this month to over 100,000 to 111,000. It came in at 37,000. So the knock-on effect to non-farm payrolls, that link has broken down somewhat over the last few years, but we could see some weakness in non-farm payrolls on Friday, just like we've seen some. But having said that, yesterday obviously the JOLTS numbers were better than expected. Openings around the ticked higher, so plenty of jobs around. Perhaps there aren't the players to fill it with this pressure on this focus on migrants in the US under the new administration. So see what that looks like. We've just had the services PMIs better than expected, so ticking higher at 53.7 from the S&P. We've got the ISM ones more significant in about 15 minutes time at the top of the hour. Bank of Canada has left rates unchanged. So I said there was only about a 25% chance of them actually cutting rates. Say this time last week or even a couple of weeks ago, we were looking at a 2.5% interest rate from the Bank of Canada. The Bank of Canada are one of those central banks that have surprised markets in the past. They were first to get into QE and get out of QE. So they're not scared to book the trend and surprise markets. But we had a spike in inflation. We also had that reduction, the spike up in GDP as well. So that sort of took off the table any chance of a rate cut today. There's about a 75%, so it's like flipped for next time. At the end of July, they next meet, and there's about a 75% chance of, or just over 70% chance of them actually cutting rates and bringing this down to 2.5%. So a 25 basis point cut is on the cards for July still based on that. Given that although inflation did spike up recently, we've seen a potential cooling of it back to the key 2% level. But it was the GDP number rising to 2.2% from 1.7%. Last time, so we'll see. The housing market in certain pockets of the housing market in Canada has always been a point of focus, and that's cooled quite significantly. We have some significant declines in sales and prices that have been fetched for both new and second-hand market houses, and across the piece, really, not just big detached houses, but apartments and condos, those townhouses they love in North America, have also cooled quite significantly as well. So all eyes now pushing back to July for the Bank of Canada. And as we say, we're back over 137, but only just here, 137.08 at the moment against the dollar. So, we might look for that 136.80 on this number, but this was very much priced or expected, shall we say. So if we just go down to the 5-minute chart here, you see the push lower only went to 136.92 on the announcement, and we're back above 137. So, excuse me. Dollar remains under pressure, and this pair continues to move to the downside. So it's more to this. Obviously, that volatility we've just seen in the last 5 minutes, obviously to do with the announcement from the Bank of Canada, but obviously that raft of US data as well, the weak ADP pressured the dollar. That's also pressured the dollar. So can we hold 137? The trend remains very much to the downside here. For the dollar, that's the hourly. Let's go to the daily. You can see we talked about this all for a while now, haven't we? There's pressure on the dollar since the April 2nd Liberation Day. It was an interesting. I think I shared it on our Discord group. Let me just find it from this morning. Here it is. I thought it was a really nice thing I saw on some Reuters reporting this morning. About the weakness of the dollar since the April 2nd tariff announcement from President Trump. You can see, as we've talked about in our daily briefs, the Swiss franc's been really outperforming 7% gain for the Swiss franc against the US dollar since the 2nd of April. Obviously that then triggered the low in the stock markets as well. But you see across the board here, across the G10 currencies, these are the big major trading currencies, including things like the Swiss krona and the Norwegian crown, outside of the major sort of 8 that we look at. And you can see, even the Norwegian krone is up 2.4%, the weakest performing of the major G10 currencies. The dollar index, we don't actually show it here on our TradingView platform, but the dollar index itself is down 8% this year, and the dollar remains under pressure. And there's lots of speak that this uncertainty because of the tariffs and the policy swings and flips and flops is adding to selling the dollar's confidence in the US. Obviously, the administration is saying the exact opposite of that, but at the moment we are seeing. Since the announcement, Liberation Day, 2nd of April, weakness in the dollar. Obviously, the president would say that's good. We've been overpriced. The dollar index has been way over 100 for a long, long time. We're still a relatively strong dollar, but we've had some significant moves in the short term. And as we go into the second half of the year, the market is still pricing a weaker dollar, a further weakness in the dollar to come. But that's a really nice graphic that I shared this morning. Oh, I thought nice graphic. Anyway, we shared this morning on the movement in the dollar. So weak dollar has obviously been lifting other currencies. So let's just run through these. So let's just finish this. Actually got back to the 15 move. So yeah, there's that move lower again. So 136.90. So check out, that's the 15-minute time frame. So the low from Monday took us to 136.75. So that's an area you might want to have a look at if this pressure to the downside continues for dollar CAD. Let's just run through the other majors while we're here. Sterling's been outperforming again, 135.40. We've been over this morning. 135.50 was tested in some earlier trades over lunchtime, and we are continuing to sort of slide sideways, move sideways here, but above the key 135 area. So here on the hourly chart, you can see we've been over and held 135 for all of the month, if you like, since Monday. The break over 135, and we've held that. It's a key area. The first break was sold off, but we're still moving up, and you can see we are still very bid here. Sterling against the dollar. The 20-day moving average, as we said yesterday, is now over 134, and 135 is approaching. It's too early to call that a support area here on this daily time frame, but certainly the 20-day moving average now sits at 134.25. So the trend remains set. We're consolidating above 135. So we need to see some significant changes for this trend to break down. Euro 114 again this morning. We've got again, and that's similar to the, perhaps not as pokey as the as sterling. Remember, sterling, they've got their trade deal with the US, or the UK have got that trade deal with the US. There was an announcement today they're going to be spared the extra steel and aluminum tariffs if they actually end up getting implemented. Of course, the UK outside of the EU. So hence sterling's outperformance of the euro versus the dollar, but euro still outperforming the dollar itself. So 114, we are back to today, having given up the break and the test to the 150 potential 115 zone. 115 is all the way up here. Euro remains bid. We are holding above that medium moving average there, the 9-day moving average. We've been above that for the last 4 or 5 days, and we're even above the 5-day moving average as well at 114. So euro again remains bid, with the 20-day moving average now above 113 at one. Here we are at 113.20. So again, it's all the same story, and they're the two majors. Dollar yen, similarly, 143.70 this morning, holding 143 this week, having poked under it last week. And again, on Monday, we went under 143, 142. 142.40, in fact, low yesterday before we had a quite strong turnaround for the dollar. But again, the flattening out of the moving averages has broken down this leg. So we were up, down, and now we're sort of consolidating through here. So hold of 143 is positive for dollar yen. A breakdown through 143 will again come to test the 140 zone to the downside. We do need to break above significantly the 20-day moving average, but that's flattening out now. So we got the 50-day coming into play as well, and that's provided resistance. So the two key upside resistance for dollar yen remain the 21 EMA at 144.20 and the 50-day moving average at 144.80. They're the two upside targets that dollar yen would need to break to break this this wave waves to the downside. So that's the key upside resistance for dollar yen. Remains short on that one. It's been under the 20-day moving average now for into its 5th day, dollar yen. So again, the story is the same. And if we just look at the Swissy, the best performing of the major currencies, we can't again rule out this 0.81 low to be tested again if we're not going to break over the 20-day, which sits at 0.8270 now as well. So more pressure to the downside, and the upside for dollar against the Swiss franc as it is against its major currencies so far. So that's the majors. Crypto is given at 105. Last time I had a look, where are we? Bitcoin 104.66, 104.600, I should say. So again, as we've said all week, we're sort of providing support, pivoting through the 20-day moving average. So I'm looking for some deviation away from this flat level support around the 105 area for some direction. Again, obviously it can come very, very quickly. With crypto and with Bitcoin in particular, but also we can consolidate for quite a while, like we did here for the best part of 2 weeks, around that 103 area. We're just a tad higher now at 105, 104,600 at the moment for Bitcoin. So down today, up day yesterday, 15-minute traders. We've had a nice break lower here, 12.15. Having looked like we were going to move higher here at 10:30. So up, and then we're short here, and it's continued to move to the downside. So Bitcoin trending lower today under the 104,500 level. So lots of data today, as I said. The major ISM services data is coming through here. Let's just have a quick look if it's updated on the Forex Factory position. Indeed, it has. That's quite a significant number. 49.9 for services ISM. Sorry, ISM services PMI data. So we're back into contraction zone from a move up last month. It was expected to move higher again. That's disappointing, given the services, the Standard & Poor's number was better than expected. The more important, or the most significant ISM Institute of Service Management number has come in weaker, and it's now in contraction. So if you just click on the chart, that's why I like the Forex Factory calendar. You see we are now, it looked like we were doing okay towards the end of the year. January was okay, but we've since then we've continued to be weighed by the uncertainty around the tariffs. Obviously, services, it's industries like accountancy services, financial services, not directly impacted by the tariffs as far as putting percentages on imports of services, but the feel good factor, sentiment factor, company spending on advice and services and banking and insurance services, all of that gets hit when confidence and sentiment starts to wane. So the trend, as you can see here, quite nicely there, it's been getting weaker all year. We were down last month. This month looks like we were positive, but we're now under this. So obviously we haven't updated today's number, but we've come in at 49.9. You can see there, just under the area. Obviously it's only 1 month, but it's adding to the trend to the downside for the year. So obviously that hasn't updated as we see each time, but we've come in at 59. 49.9, and there we are. It has actually come in there. Quite a big miss from expectations, just like we had a month or so back where we missed, but we were still positive there in April. May beat and looked at we're upside. So this is only 1 month, obviously, and every time we've dipped negatively here all the way back to 2023, we rallied quite significantly, and each time we've come back. So it may be just an outlier for now, but as you can see, the trend from the top here in November has been to the downside. So any further weakness over the summer, as we go through July and August into September, the key September, October period, could be quite crucial. But that's a significant miss. We'd expect some movement on the dollar on that. So Bitcoin moving lower, 104.55, 104.500. I'll come to the indexes in a minute because they were looking quite good. Let's go back to the euro. 114, 17.20. So a tick up for the euro. There's that ISM data at 3 o'clock ticking in. So the trend continues to the upside. So we might have another run to the 114.50 zone for the euro. There's 114.20. This tick line here, and there's the, sorry, just move that down, and there's our high from yesterday, which took us to 114.50 zone. So we could quite easily move to that. We've had the weak ADP, and we've had the weak services ISM. That's quite a sticking point. That is strong. I mean, it's obviously sentiment. It's expectation of what these guys are going to do in the services sector, the Institute of Service Management, but it's relatively soft data again. So ADP, which is hard, jobs in the private sector, credibility has been hit quite significantly over the last few years. The ADP data, but it's still it's very significant miss, and that services number has been quite a significant miss as well. So, flying in the face of that was the better than expected Standard & Poor's data, but overall, the ISM sort of wins out. If we actually see the detail here on our calendar here. So scroll down. Here we are. So a miss across the board there for non-manufacturing. PMI new orders were weaker as well, significantly weaker. That's a bit of a scary one as well. Employment was up, which is the administration will focus on, but prices were also significantly up at 68.7. So again, that's a story of it being potentially inflationary. So could see what that dollar CAD pair's done as well. Where are we now? 136.39. Yeah, so sorry, 93. So from 7 pips, it's not that big a move, is it? It was only 7 pips below the key 137 area, but the bias remains to the downside. So we'll watch that 136.75 target area today as more data comes out and the US market gets into full swing. Stock markets opened relatively flat again, having had a good day yesterday. We were up, the S&P was up 34 points yesterday at 5,970. And interestingly, the cash market is within a smidge of a 20% bounce on the S&P 500 from that April, the lows we had in April. I'll just take this up to the daily. I'll show you what I'm talking about. So this is our nadir here at the beginning of April 7th, April 9th, where we went under 5,000. So we're now, back within a smidge of 6,000. This purple line here is a big thick purple line. It takes us 6,000. The big purple line here is 5,000. So we were under 5,000 here at the beginning of April. So we're up 1,000 points, near 20% rally from the low. So that's a potential bull market, and obviously testing that would then have a go at new all-time highs. Remember, we rejected the 6,000. Here we are, this over 6,100. We got 6,135 before we cooled through February and into the low of April. As the tariff uncertainty swirled and continues to swirl, but we have recovered. So big line in the sand sits at 6,000 for the S&P 500, but that's a significant technical move potentially today. But we'll see where we finish. The cash market. Europe's shares are higher today as well. The DAX is up 0.451% today, and the S&P 500 is up 0.25%, although it's down there on that daily candles down. We're struggling as we get to these all-time high zones for stock markets, but again, it remains bid, nicely bid here, the FTSE over its 20-day moving average. Not one I particularly trade. I've obviously got my long-term investments are in FTSE stocks, but it's been a moribund sort of move over the last few years. So trying to play catch up, and some as we saw the data, the PMI data from the UK was better than its European counterparts today. So we're continuing to move higher. I'd like to see obviously a break above these and establishing new all-time highs here for the FTSE, but again, that remains bid today, underperforming the DAX and the CAC in Germany and France, respectively. So we had a look at the S&P and Nasdaq, 21,600 breached this morning. So I'll say another positive day yesterday for the Nasdaq and the Nasdaq 100. Today we are down a tad and down on the ADP data earlier, and now on the ISM data. So we're struggling at our highs today as the cash market gets into full swing. Now half an hour into its trading day in New York. The Dow, the industrials, 42,500. Similar pattern as you might expect, consolidating at highs, hit by the ADP number, and now just hit by that weak ISM numbers as well. But again, another one that we are still long from the 27th last week. And we're in the money on that one. We are in the money on the Nasdaq here. The target range up here. There's our entry here, so we're in the money on that one. And the S&P, just to show what we did, we took this target out the first time, so it's half a position. We're back now. Just hanging on to that. I might pull the stop loss up a bit tighter. See if we get to that 6,000 level for the S&P 500, but it's very much in the money. But the ISM data is what's going to grab the attention today. There we are. We've updated the Forex Factory have updated their chart, and you see it's a very weak reading. It's the worst reading for services ISM since July last year, so nearly a year ago. We've got services struggling. They're in now, technically in contraction, but it's only 0.1 of 1, isn't it, at 49.9. So it could be an outlier, as I said earlier, as it has been every other time it's gone negative. We'll see what the summer data brings, but it's adding to this argument about a technical recession in the US as well. But the inflation data remains weak. It's weakening, but the data might start to hit second quarter earnings as we move forward. The doom mongers have been saying that's what's coming. The administration have been saying no, it's not going to, and weaker oil prices is helping that disinflationary pressure on the US economy. So if we just have a look at oil as well, I see here oil has lifted in the last few days. Quite significantly away from the $60 level here. This is this pivot area here, $60 roundabout here, the support area we'd had, and we've now up to $64. So it's quite a significant move away from that $60 handle. And yesterday's move took us above the 50-day moving area. So a significant upside day. Significant upside day on Monday. It was a bit too early to call that, but we were above the 20-day movement, but we'd been there before, so we were still really range bound. But yesterday's opening and breach and move away from the 50-day moving average was significant as well. So see how far this has got to run. So long oil or US oil here from Monday night on this big strong candle. We followed through yesterday, and we're up again today. Obviously, watch the news like a hawk when you're looking at oil, because there's all sorts of things move the oil price. But we are currently trading 63.92. We're back under the 64, having a go at the 64 handle. We have had a poke at it earlier today. But oil is our bid, having a good week and a good start to June as driving season moves on. So the headlines really at this hour, it wasn't the Bank of Canada's non-change, it was this services PMIs, the weakest for nearly a year. The July last year was the last time we were in contraction, but it was only for 1 month, so it might be just an outlier. Don't read too much into this. The bulls would say. But it certainly pulled down the rally we've seen in the stock markets over the last couple of days, and with the Nasdaq at 21,675, Still green on the day. The Nasdaq, S&P, still green on the day, and the Dow, I think Dow was red on the day, wasn't it? Yeah, flat on the day, but we'll continue to move up, and well supported with the big support of the 20 period moving average down here on all three of the major stock markets, which we are remain long on currently. As far as potential trades tonight and our end of day strategy, let me just bring up the platform on my other terminal here. I'll run through what's currently. How's it gone? It's not loading. Hang on a minute. Let me do a quick scan of the 50 odd assets I look at. So we got some Swiss crosses here. We got Aussie Swiss, CAD Swiss potential trades. We got sterling. We're looking to go long again, as we were. Yeah. So dollar cable. I might actually open this now. We're looking at a target of 136.18 from 135.57 at the moment. That's looking okay. Stop loss with about 60 odd pips. Target around 60 pips as well. So we'll take that. Well, let's have a look at it. Look. So I'll post that later on. That's looking like that's looking to go push higher. Pound. An update today following the update on Monday, retraced and held the 135 area. So I'm looking for one. So I'm taking this long. I'll probably trade this now. I'll probably click it in now. I'll take that long now. So I'm long 135.54.70 as I've just been filled at 135.54.70. I'm just making a note of that. For 135.54.7 we've been filled. Our stop loss is 134.94. 34.94, and I'm looking for 136, about 60 pips from there, whatever that is. It's telling me 136.18. 136.18 is my target for cable so far. So I jumped in a wee bit early. EuroCAD is another one. That's less. That's a messy. That's short. The stop loss is a bit too close at the moment for that one. I'll have a look at that. CAD Swiss was the other one. That looks a bit sideways as well. That looks yeah, maybe stop losses again is a bit too close at around about 20 pips. I'm looking for 60 pips, taking us back to .60. We're at 59.93 at the moment for CAD Swiss, but it's very much sideways action. I probably won't take that one. That's going to leave flying. Aussie Swiss, probably a similar setup. A bit also channel bound sideways, also flat. And probably stop loss a bit too tight on that as well. So I'll look at that later on, but that's not looking very clever. So the only one that's caught my eye at the moment is long pound dollar. So we've gone long here at this 135.54.70 we were filled. So 54, we were filled a wee bit, just a bit at where we are now, basically just shy of where we are now. 154, 135.54.70.7 is where I've been got my buy order placed. Sorry, my order filled. It's a full position, and we're looking for 136.20, which is up here somewhere. I'll update these charts later on. So that's the only major trade looking to go long today. The more aggressive positions, there's lots of those kicking around. Aussie yen, CAD yen, EuroCAD, Euro, Pound. Let me just have a look at that on that one. DAX, interestingly, is looking to go long. Maybe have a look at that later on as well. Yeah, so DAX, possible long position at 24,200 holds. Pound yen is another one. Yep, that looks okay. Pound yen, so long pound yen 194, 194.14. So pound yen's 194 pro. So that's a pound. JPY. So that's chopping around, but there's the big day yesterday up. So we're buying on the retrace on that. So long 194.17. It's been filled, pound yen. So let's just put that on here where I've got you. 194. 94.17 I've been filled on that one. So 17. 194.17.2. I think it was filled. Yeah. Sorry, I'm just typing this in. 119. We were along there. We were filled at that 194.70. So that's that entry we got here. The T area, the zone is 194.66 will do me initially. So 66. Yeah, dot 66 is our target zone for that one, and our so in here looking for this to the upside. I'll tidy all this up in a minute, and stop loss sits at 193.68, so round about down here somewhere. 93.68. Yeah, having that strong day yesterday, so we're down here somewhere for the stop loss. I'll tidy all that up in a minute, and get those clothes dumped up. So so a long cable from our live position here today, and long pound yen on a short-term basis, but it's more aggressive, so we'll watch that a bit more carefully and check the others as the day comes to an end. So there we go. Say big surprise, more soft data basically from the US today. We've had the ADP, a big significant miss at 37,000 from 62,000 last month, which was again marked down to 60,000, and expectations of 111,000 was missed significantly at 37,000. And more importantly, probably as far as the market's concerned, as far as the dollar's concerned, the stock market's concerned, that miss for the ISM PMI coming in at 49.9 under the key contraction expansion zone at 50. Remember, anything over 50, a service, the sector is expanding. Under 50, the sector is contracting. So it's only a minor miss, but again, you can't rule out that it was under 50. It might only be for this 1 month. It probably will be, but there we go. It's had the movement today, and the Bank of Canada remaining put, and they're about to start in 10 minutes their press conference. You know, I say they've been known to surprise before. Be interesting to see what how the market interprets what's said at the press conference about its expectations for a rate cut in the July meeting at the end of July. So, but we're, you know, it's nearly a whole 2 months. They don't meet till the end of July, so it's a big 2-month gap. So a lot can happen between then and now, obviously, with all eyes on Washington, and the focus now from the Canadian government moving away from its biggest, nearest neighbour to cement some more trade businesses. So see how the Bank of Canada interpret all of that, and what they've got to say in 10 minutes or so at their press conference. So my friends, if you are looking to open a prop trade company, come to us at theproptrade.com. Our evaluations, 2-step, 1-step challenges. The discounts are available. A standard challenge, as I say every day, it's our popular $25,000 account is the one that's still of most takers. That was working. Oh, it's not. It wasn't working, is it? But so as a new client, 20. Still get 25% discount. That's the best, yes, best that's available currently. $130 gets you $25,000 worth of equity to play with. Trade consistently, trade respectfully, trade with sensible risk management. You've got to do that because of the rules that are implied here anyway. But you know, prove yourself over these 2 steps get yourself a 8% target, and then it's only a 5% target in step 2, and then you get a funded account. Tell us, prove who you are with your KYC, and you can be taking home 80% of the profits as real cash, real dollars, within a few days of opening that getting that funded account. Remember, funded accounts are funded after the first week, every week on a Friday. So there's money to be made if you have a system and a strategy and approach that works for you. Come and prove it with a demo account, and then you get some real cash into your account once you've done it, and then you just repeat it and just keep scaling up over time. So we're here to help you, my friends. So take care. I'll see you all again tomorrow. It's weekly claims tomorrow, and obviously the the Central Bank of Europe, the ECB. So we'll be earlier tomorrow for the ECB announcement. They, again, a bit like the Bank of Canada, nailed on to cut, bring rates down to 2%. So another 25 basis points cut from the Bank or Central Bank of Europe. But I'll just leave you with the dollar against the euro. We've got a stronger euro or weaker dollar, 114.18, and we're up again. Today's the daily. You see the day. Another good day for euro against the dollar. So take care, my friends. See you all again tomorrow, and trade carefully. And as ever, may the pips be with you. All the best. Bye-bye.